Hi, this is Am here with the Bulletin Board Heroes here at Zacks Traders Cafe for Monday, the 26th of February. Starting on with the FTSE 100, which is becalmed between the 50-day moving average rising there at 76.20 and the top of that rising August trend channel heading for 78.30. We're hoping for 78.30 by the end of next month because the FTSE is so slow at the moment to take that long to go up 150 points. End of day close back below the 50-day line, which we're hoping will not happen. Could take us back to the 200-day moving average at 75.40. RSI still above neutral 50 at 55, which is under 56, which is in the right place for a move to the upside, not the downside. On to the DAX, and here the market here floating like a butterfly and stinging like a bee with the two unfilled gaps to the upside in the recent past, still holding near the recent highs. Our initial target there, that red September resistance line, projection 17,700, and then after that, best case up to as high as 18,500 by the end of next month. I mean, even though we have already come up a long way, the two gaps to the upside do suggest that actually there's still some gas in the tank there. On the downside, the lowest we're hoping for would be 17,000 at the floor of the channel, or alternatively 16,800 at the rising 50-day moving average. Moving along to the Dow, and here we've got the market again in a very strong form, gapping through resistance there at 39,000. Above 39,000, we've got the possibility of a move up to as high as 41,000 by the end of next month, while we remain above the floor of the rising trend channel there from back in October, 38,400. The worst case here is 37,900 and the 50-day moving average, but looking strong here given that all the dips for the RSI have been up above the 50 level since the early part of February, which I think is absolutely amazing. Moving on to Bitcoin, which has been amazing in its own way, but question here is whether we've got a new leg to the upside. What's good at the moment is the way that we've got new support above 50,000 and above the old January resistance. While that remains the case, we're looking for the upside and assuming that this is just a mid-move consolidation ahead of a move up to 60,000 by the end of next month. What would clinch 60,000, or at least what could be a trigger for that, would be an end-of-day close through that the top of that August resistance line projection at 53,000 to take us through to the big 60,000 level. Moving along to gold, and here the picture, well, it seems to be that we're poised to break higher now. December resistance line there, 2055, and above that looking for 2100 in short order, maybe the next couple of weeks, and then up to as high as 2180 as soon as the end of next month. But obviously gold being gold, it might take a little bit longer than that. Nice rebound for the RSI on the neutral 50 level, which tends to be a decent leading indicator on price action. If we do break down, the worst we're expecting is 2,000 at the floor of that rising March trend channel from last year. Moving on to the stocks, and quite a decent run of form for the Bulletin Board Heroes with many of these situations. First one is Aptamer, and here it looks as though we're trying to break out of this descending price channel in place since December. Want to see an end-of-day close through 0.78 to fill the gap up to 0.93 and maybe even stretch to as high as a penny by the end of next month. Upside or potential upside value while we hold above 0.67, which seems to be the current support for the shares and old resistance on the way down. On to Cambridge, which I think we've got to mention in the papers over the weekend. Here you can see that we've got a very interesting price action. We love our gaps here. And what we had there is a gap fill rebound and then an unfilled gap to the upside through the 50-day moving average, presumably due to the press coverage here. The view now is that we are in a rising trend channel base, which I will try and draw right now, and that should take the shares up towards the top of the channel there, as high as 59 pence over the next few weeks. The 59 pence is the top of the rising trend channel from back in December, which doesn't seem to be wanting to make its presence felt on the screen. Well, there it is here. So that kind of thing for Cambridge. Next up is EnSilica, which hopefully will be the new Nvidia, but at the moment I'm going to settle for just trying to get back to where the shares were back in October. We've hit our second target there, which I was complaining that we hadn't, at around the 64 pence level, 63.5 the high of the day, above 64 pence, looking for the purple resistance line projection from April last year as high as 83 pence by the end of next month. But the big win today is the unfilled gap to the upside through the 200-day line, and ideally we hold above or close above the 200-day moving average at 59 pence and make progress towards the low 80s. But beautiful RSI rebound off neutral 50 as well, and bounce above a rising 50-day moving average, all of which I think I said the last time I talked about the shares very recently. Moving on to Falcon, and here we've, if I extend the line, I suppose we've just about hit that second target there around 13.5 pence, which is obviously very satisfying. I'm trying to work out now where the shares will go next. The next level, next main level, obviously, is from 2019 at 20 pence, and we're looking for that while we remain above the latest gap floor around 11 pence. So above 11, looking for 20 on Falcon, and I suppose the resistance line projection there is one something like that as the next target. So, but basically back to 5-year resistance for the shares while we're above 11 pence. Next on the list is Global Petroleum, which tends to be a slightly difficult customer sometimes, but here we're looking at the situation in terms of a potential fresh rebound or ricochet off a rising 50-day moving average, which is basically what Premier African did back on Thursday, Friday last week. So let's see if Global can do a Premier. Initial target here, which has been the target we've been looking for before, up to 0.15, and then after that as high as 0.28 over the next 1 to 2 months. I suppose that target there should really be like that rather than where I've drawn it before, but at least the initial target there up to 0.15 above the 200-day moving average. Next up is Hydran Utopia, which was still trading at its all-time lows as recently as a month ago, so that shows how much the market knows, and I presume that 1 or 2 people may have been caught short, which is obviously very disappointing for them. Here you can see that we've hit our first target. We hit over, well, we actually have several targets. First target hit at 6p, the second one at 9 pence, and then the final target up to 13 pence. If you're a fan of the shares and looking for greater upside in the wake of the RTO announcement, then the next level up would be that purple line there, as high as 22 pence by the end of the next month. But that would only be triggered once we had an end of day close through 13 pence. I think the peak today around 14.5 pence. This stage only back below 9 pence, really killing the idea of a turnaround. But you can see overall we've had a saucer-shaped turnaround, especially January, February for the share. So the charting did actually work there, and we had an uptrend line in the RSI window, which has been in place, in fact, for as long ago as June. The final point to note is that both the 50 and 200-day lines are now rising, which suggests that we're about a couple of weeks away from a golden cross. In fact, less than that, given how close they are. So a week or two away from a golden cross, and the run up to a golden cross tends to be the strongest part in the cycle. Invinity is next, and here we're looking for a turnaround. We've got a bear trap gap reversal, one of our favorite setups. The bear trap from below the old January support there at 24 pence. Above 24 pence, we're looking for the 200-day line at 38 pence by the end of next month. Obviously, if you're cautious, you wait for an end-of-day close above the top of that falling wedge from September, around 29 pence. This stage, only back below 24, really making the situation look negative. We haven't seen Lexington bounce sharply of late, but I think the last time was in the spring. But the current situation is it looks as though we've got a rising trend channel base, we've got a rising 50-day line as well. We gapped above that. That suggests that above that 50-day line at 3.9 pence, we're looking for 5.2 pence, and the 200-day moving average as soon as the end of next month. Mosman is next, and here another difficult charting contender. The positive here is the way that not only we're up 10% today, but we've had the 50-day line rising for several weeks, and consolidation above a 50-day line tends to be a decent leading indicator on the upside. In this case, we're looking for the shares to get to 0.03 by the end of next month, while they remain above the 50-day line there at 0.014. But I understand that's not for the faint-hearted or the squeamish. Premier African is next, and here we had successful ricochet for rising 50-day line as well as that June trend line break. Still waiting for the shares to hit that red resistance line target, 0.41 now. We just missed it last month, or earlier in the month rather. The big win here, though, would be an end-of-day close above the 200-day moving average, which should take us quite directly up to post-July resistance at 0.6 plus. That really would be the big prize. As you can see from Friday, we had a gap close buy signal, so we closed above the top of the gap and had the follow through today, 23% up. So the charting working there quite nicely for a change. Moving on to Shearwater, and here you can see the shares also rising within a rising trend channel base. We've got a rising 50-day line there and a very strong couple of days of price action, opening at the low, closing at the high. Very strong candles. That suggests that 60p should be on the cards over the next week or so as a minimum, and above that then perhaps the upper parallel of that rising trend channel base as high as 85 pence by the end of next month. Obviously a punchy call, but it looks like a punchy chart. Finishing off with Tristel, which seems to be covering itself in glory today here. We've gapped up for the second time in consecutive months, and we've gapped up. Also gapped up in January, looking for £5.50, while we remain above the floor of the gap there at £4.64. So a nice setup there. That's it for me today. More updates tomorrow.